Have you ever wondered which is a better investment, Boeing or Lockheed Martin? These two companies are titans in their industry, each with a rich history and a significant impact on the world of aviation and defense. Boeing, known for its commercial airplanes, also has a substantial footprint in defense, space, and security. Lockheed Martin, on the other hand, is a global security and aerospace company engaged in the research, design, development, manufacture, and integration of advanced technology systems, products, and services. They're both heavyweights, but when it comes to investing, it's not just about size or reputation. It's about financial health, growth potential, and the ability to generate returns. So, how do they stack up against each other? Today we dive deep into the financials of these two aviation giants to understand which could be a better investment. Let's start with revenues, the lifeblood of any company. In the year 2023, Boeing pulled in a total revenue of $78 billion, while Lockheed Martin reported a total revenue of $68 billion. Now, if we look back to 2018, we can see the growth pattern these two giants have followed. Boeing's revenue has experienced a compounded annual growth rate, or KGR, of -5% over the last 5 years. Lockheed Martin, on the other hand, has seen a positive KGR of 5% in the same time frame. Now, where is all this revenue coming from? For Boeing, 44% of their revenue comes from their commercial airplane sector. Another 32% flows from Boeing Defense, Space and Security, and the remaining 24% is generated by Boeing Global Services. Lockheed Martin has a slightly different revenue structure. 41% of their revenue comes from aeronautics, 16% from missiles and fire control, 24% from rotary and mission systems, and the final 19% from their space sector. What about geographic distribution of these revenues? Well, 58% of Boeing's revenue comes from the United States, 14% from Europe, 13% from Asia, 8% from the Middle East, and 7% from other regions. Lockheed Martin's revenue distribution is a bit more concentrated, with 74% coming from the United States, 10% from Europe, 9% from Asia Pacific, 5% from the Middle East, and just 2% from other regions. So, while Boeing has a higher total revenue, Lockheed Martin has shown a steadier growth over the years. Now, on to the profits, the real measure of a company's success. Let's start with the gross profit margin. In 2023, Boeing had a gross profit margin of 10%, while Lockheed Martin boasted a higher gross profit margin of 13%. This indicates that Lockheed Martin was able to retain a larger portion of their sales revenue after accounting for the cost of goods sold. Meanwhile, the net profit margin shows a different story. Boeing had a negative net profit margin of 3%, which means they lost money on every product they sold. On the other hand, Lockheed Martin had a positive net profit margin of 10%, showing they made a profit on every sale. Now let's turn our attention to the net profit figures for the last 5 years. From 2018 to 2023, Lockheed Martin consistently maintained a positive net profit. Their net profit in 2023 was $7 billion, proving that their operations have been profitable. On the contrary, Boeing's net profit during the same period paints a less rosy picture. Since 2019, they have been reporting a negative net profit, with a loss of $2 billion in 2023. This indicates that Boeing's operations have been unprofitable, and the company has been incurring losses for several years. It's important to note that a company's profits are not just about the numbers. They reflect the company's ability to manage its costs, generate sales, and ultimately deliver value to its shareholders. While Boeing's recent performance may be concerning, it's also a reminder of the importance of evaluating a company's financial health in a holistic manner. In conclusion, Lockheed Martin has maintained a positive net profit, while Boeing has been in the red since 2019. These trends provide a revealing snapshot of the financial health of these two industry giants, and are crucial factors for investors to consider when making investment decisions. But what if you had invested in these companies back in 2018? Let's take a trip back in time and imagine that you had a spare $1,000 to invest. You decide to split it evenly between Boeing and Lockheed Martin, placing $500 in each. Fast forward to today, February of 2024, and let's see what those investments would be worth. Your $500 invested in Boeing would have dwindled to $324.50. That's a loss of 35%, or an annual decline of around 8%. On the other hand, your $500 in Lockheed Martin stock would have grown to $810. That's an increase of 62%, or an average annual gain of 10%. In the investing game, it's clear that Lockheed Martin has been the better bet over this period. An investment in Lockheed Martin would have given you a 62% return, while Boeing would have lost 35% of its value. Now let's look at the company's assets and their liquidity. Firstly, let's talk about total assets. At the end of 2023, Boeing's total assets amounted to $137 billion, whereas Lockheed Martin had total assets of $52 billion. Then, there are net assets, which are the total assets of a company minus its total liabilities. By the end of 2023, Boeing had net assets of negative $17 billion, meaning their liabilities exceeded their assets. On the other hand, Lockheed Martin had net assets of $7 billion. We can also look at the equity to total assets ratio. This ratio measures a company's financial leverage by comparing its total equity to its total assets. For Boeing, this ratio was negative 13%, again due to their liabilities outweighing their assets. For Lockheed Martin, this ratio was 13%, showing a healthier financial position. Now let's shift gears and look at liquidity. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations. Boeing had a current ratio of 1.14, while Lockheed Martin had a slightly higher current ratio of 1.21. Another important liquidity ratio is the quick ratio. This ratio measures a company's ability to meet its short-term obligations with its most liquid assets. For Boeing, this ratio was 0.31, indicating a heavy reliance on inventory as a current asset. Lockheed Martin, however, had a quick ratio of 1.03, which suggests a stronger liquidity position, as it can cover its current liabilities with its most liquid assets more effectively than Boeing. Lockheed Martin seems to be in a healthier financial position with a better liquidity situation. Finally, let's examine operational efficiency and cash flow. First, let's talk about inventory days. Boeing's inventory sat around for an average of 411 days before being sold, while Lockheed Martin moved their inventory in just 19 days, a truly impressive figure. Now let's turn to accounts receivable days. Both companies had similar figures here, with Boeing at 12 days and Lockheed Martin at 13 days, indicating how quickly they can collect payments due. Next, we look at operating cash flow, which reveals the cash generated from routine business operations. Boeing generated $6 billion, while Lockheed Martin generated $8 billion. Lastly, free cash flow, the cash left over after a company pays for its operating expenses and capital expenditures, was $4 billion for Boeing and $6 billion for Lockheed Martin. In conclusion, Lockheed Martin has a lower inventory days figure and a better cash flow situation. So, which is a better investment? Boeing or Lockheed Martin? It's clear that both companies have their own unique strengths. Boeing, with its larger revenue base, has a diverse business portfolio that spans commercial airplanes, defense, space and security, and global services. However, it has struggled with negative net profits and a high level of inventory days. On the other hand, Lockheed Martin, while generating less revenue, has demonstrated a consistent net profit and a remarkable inventory turnover. The company has also shown a stronger return on equity, thanks to its higher net profit margin and asset turnover. When it comes to investing, you would have seen a greater return from Lockheed Martin over the past 5 years. While both companies have their strengths, Lockheed Martin seems to have a more stable financial performance. But as always, do your research before making any investment decisions. And don't forget to subscribe for more financial analysis of top companies.